Okay, well, look, good morning, or good afternoon, good evening, wherever you are. Uh, Firstly, a big thanks to Mike for having me along. I've kind of been off the airwaves for a while in a public sense. I've been there for the clients every day, but quite a few issues last year personally, so I took a bit of time out from being public. So if you have recently been in my new Telegram channel or on some of the emails and so on, you know, we have a little bit of a catch up to do. And again, thank you, Mike. That's given me the opportunity to sort of catch up with everyone. And for those of you who don't know me, I will tell you a little bit about myself in a second. But I want to tell you about my real objective today. I'm going to put my timer on because I told Mike earlier that the slides took me forever, and what I realized was that this is actually a day course. What I'm going to talk about today is probably what we could do in a whole day. So I'm going to attempt to give you the broad strokes in 40 minutes. Timer's on. So for those of you who know me, lovely to connect with you again. That's genuinely, I'm really excited about that. And for those of you who don't, let me just give you a quick overview of who I am and what my background is. So essentially, I'm an independent trader and investor, and have been for the last 17 years. Mike mentioned magnetic trading. I've been involved with that co-founded that, and been a partner in that for 12 years. And I think most of you probably will know me through that or through other webinars that I've been on. Essentially, at magnetic trading, again, same theme: independent traders. Mark and myself, when we demonstrated our trades, we would trade live every day. We still do that, and really tell you what we're investing in while educating people over the long term, not doing short-term courses and see you later. Look, let's learn, let's apply, let's see what we're doing day to day. And I know probably a number of you are a testament to that for over a decade. So yeah, life changes and throws you some curveballs, and you think about life a bit. And last year I decided that I'm going to really just focus on my own trading, my own investing, and not necessarily leave magnetic, but just go on my own little journey. And I'm very lucky that a lot of the clients from magnetic are continuing with me, and I'm quite grateful for that, because it's kind of what I say to everybody. It's a bit of a symbiotic relationship. Myself as a private trader and investor, I'm really essentially just trading my own fund, which is quite an isolating thing. And I'm with my own ideas. I get to share my ideas. I get to share my trades with the guys, and it is a benefit for me for sure, because I think maybe twice, maybe three times before I invest my money, but I think 10 times before I tell other people where to potentially put their money. Obviously, they make their decision of where to do that. So I started that last month. That was the beginning of the new chapter, beginning 1st of April. It wasn't an April Fool's. And I'm trading my own fund, essentially, which is my own money, as a private trader and investor, and licensed to give advice under Stone Capital. So basically, the services I run these days is day trading, investing, and as I said here on the slide, basically I'm telling you what I'm doing with my own money in the markets. So that's a little bit about me. Today, I want, actually, a bit more of the story with that, and then I'm going to get into where we're going today. But through magnetic here, back in about 2019, Mark and I started putting out. We were essentially focused on pretty much trading, and we were doing other stuff with our money. We had spillover from trading, and we'd do some other things, investments, and Mark does some property. I mainly focus on stocks. And we started to share with our clients what we were doing on the investment side. And that was through our inner circle. And then in 2023, we formalized our investment program. And I aggregated everything what I was doing from all of my accounts into one account. And I just wanted to sort of show you what I personally have been doing since then. So it's in the last 22 months, just shy of 2 years. Started here in July, end of July 2023, and just to whatever day that was, Wednesday, when I started writing these slides on Wednesday of just pouring down the thoughts. Um, Almost 160% over that time, and that is a combination of trades and investments, and an exceptional return of $2.6 million over that time in 22 months. I don't show this to you to show off or anything like that. I just want to give you proof of concept of what I'm going to show you today to demonstrate the ideas that I'm going to impart of what I really do in the markets. And that's really my intention today, is to give you a bit of a flavor of what I do and some of the ideas that you may be able to implement. And as I say, this is pretty much like a day course in 40 minutes. So a little bit about my journey in trading. For the first 10 years, really, I was very, very, very focused on short-term trading, basically leverage trading. I originally started as a Dow Jones trader, and when I moved out to Asia, I moved into the DAX and the NASDAQ, and essentially I traded for about 1 to 2 hours at the European Open. And my biggest goal at the time was always just to trade a larger and larger and larger account. That was it. I want to trade larger because my goal was to make 3 to 5% a month. Now, that as a business plan is actually okay. It makes sense, right? You trade a $10,000 account, you make 3 to 5%, it's okay. But you trade a $100,000 account, okay, this is starting to be meaningful money where you might be able to start changing your life. So it was a great plan, but I'll be honest with you, I was very, very blinkered by this, and I didn't really look at anything else. But just solely leverage trading and trying to increase your stake and so on, it is a little bit limited. There's certain markets you won't be able to get what you want to get on, such as the local market in Australia, or perhaps the FTSE. You're not going to be able to get on the size you want to get on. Plus, there's mental limitations as well. It's like going to the gym. You can lift a weight and you can increase until you start to plateau and you start getting minimal amounts more, or you get to my age and you actually should just be lifting less and doing more reps. But here I'm going to tell you, and I had this aha moment, probably 7, 8 years ago, which is, I feel stupid for that, is that I didn't need a big account. And here's the good news for you. And I've been a bit cheeky. I'm putting down the tips. So write them down as we go. And as Mike said, we'll probably do something later. And maybe we can take each tip and make it into a longer session. So the key thing in all trading investing is obviously protect your capital. And these days, I only have about 5% of my overall portfolio in leveraged accounts. So if something blows up, it would be a very bad day, but I'm still going to have 95% of my capital, and I can deploy that. So that's really point number one. But I just want to give you a quick demonstration of why you don't need a large account, that you actually only need the margin in your account. So let's take this example. I'm a DAX trader. Say, for example, this is all of an example, by the way. If any of the figures are wrong here, don't worry. I'm really just trying to demonstrate you don't need a huge amount of money. So let's say we trade $5 a point on the DAX. The actual position in the market is going to be $100,000, right? Well, the margin you require is only $333 under 30x margin, which is typical for UK and Australia. If you just said, okay, let me put 15 trades into my account, that's $5,000. Now, for a business, that's not a lot of money, certainly from my perspective. Let's say we have a frequency of 4 trades a week and 12 wins, 5 losses, 60% win rate, not particularly high, 2 to 1 risk, 2 to 1 reward to risk ratio, meaning If you risked $100, you'd gain $200. Also very achievable. You'd net out about $1,900 a month. That's a 38% return on your capital. That's huge. Plus, while you can now do other things with your money. And that's the aha moment that I really had was, I was getting to a point where I couldn't lift the weight anymore. And I needed to do other things with my money. Plus, I had all this money coming from my account. So I thought, right, well, where do I put this money? And this was the sort of aha moment for me for moving to having a two frame from leveraged and non-leveraged trading and investing. So tip number 2, this is my playbook at the moment. So massive tip for you. I trade leverage in the DAX and the NASDAQ, and I'm going to show you a trade that I do pretty much every day. It doesn't set up every day, but I look at it every day. I also have non-leverage trading in crypto and US stocks. I no longer invest in stock market ETFs. I used to. I know some of you will know me for that, and I'm going to tell you why in this call. So here is exactly the items or assets that I'm involved in. Quite a small list. Bitcoin, IBIT BlackRock ETF, Strategy MSTR, Cantor, SEP. These are all Bitcoin proxies. They trade at a premium to Bitcoin. That's a whole session in itself. Solana, Tesla, and Nvidia, which I'm sure you've all heard of. And I have a sort of an 80-20 split between investing, where I'll invest sort of medium to long term, but rotate that seasonally. There's seasonal trends where the market goes up, seasonal times that the market goes down, or we get into very overbought or oversold tariffs time in the market where I'll take that money that I've perhaps rotated into cash and put it back in. The other part is I'm using 20% of this to trade in and out of the market. Something I don't talk a lot about, even within my community, is leveraged options with leaps and covered calls. I do a little bit of that, and that's something I'm going to be adding to the guys in the future. So why is this my focus? Well, number one, again, tip number 3, we need cash flow. And the problem with just investing is you're like, well, I'm long-term investing. When am I ever going to spend this? I might spend this when I retire, but at the moment I have no money. How many people know that in the property market? I mean, I've seen my family, I saw my mom, loads of assets, but nothing to spend. So we need to generate cash flow. And one of the richest guys I knew or know, I was on his boat, and he said to me, it doesn't matter how much money you have, it's how much cash flow you have. So for me, trading is about cash flow because bills are monthly. So from a leverage trading perspective, as I say, I trade DAX and NASDAQ. Why? Because they're more stable. They're not going to move that much, and I can control my risk. I trade non-leverage on highly volatile assets like Tesla, Nvidia, Bitcoin, Solana. SUI, I haven't mentioned. I do actually trade on that, where I can get lovely returns, anything from 10% to 100%. So imagine this. Say, for example, we go back and again, this is scalable in terms of more money, less money. It doesn't really matter. But say you've got a $10,000 account, and now you go, okay, well, I only need $5,000 in it. Well, maybe I go and I can't do this investment bit with Cam, but I can do some sort of trading, non-leveraged trading, and come in and out. It might be a week, might be a month, might be a couple of months, and gain 10 to 100%. So you do that a few times, and suddenly, whoa, that 5,000 just turned into another 5,000. It actually made me more money than my trading, especially if it was over a couple of weeks, which can happen. Doesn't always happen, but can happen as well. And that was the aha moment for me of like, actually, yeah, let me just put my money in really hard assets where I don't really need to worry. I'm happy with these assets. longer term, but also I'll benefit from them short term as well. Okay, let me show you a really simple trade. And what you're going to think is you're going to go, that Cam, that's just too simple a trade, and it's not going to work. Well, it's one that I use every day. It's one of a few tools I use every day for leverage trading. And it's really, really simple. Now, this is a chart of the DAX. It would work with the NASDAQ, of course, because I trade that as well. It probably work with the Dow Jones. Works with a little bit more volatile index markets. I can't speak to, do you know, it probably work with gold. I've never tried it with gold. I can't speak to FX because I just don't trade FX. But it works with Bitcoin, it works with Solana, it works with SUI. And all you need to do is get a chart, take a picture of this, or I'll give you the slides later, is you just need what I call a fractal box. And a fractal box just shows you here where the recent swing highs, swing lows were in the market. And you need a simple Bollinger Band, standard settings. And what you do on a morning is you draw a line on the 4-hour chart at the top of a fractal box outside the Bollinger Band. I appreciate there isn't one here, so I've just had to put it at the top of the market. And you draw a line at the bottom swing, which is outside the Bollinger Band. So that's here, so it's not here, it's not here. These are all inside the Bollinger Band. Okay. Let me know if that makes sense. Then we move to the 1-hour chart, and we do the same, but line here. Well, it's not a line here, is it? Because it's not outside the Bollinger Band, so it's a line here. So now we've got some reference points on our chart, and if you've noticed, what kind of trend are we in here? We're in an uptrend. So if we're in an uptrend and we start breaking these fractal levels down, these are great levels for where we might see a reversal come in. Now, it does get a little bit more complicated. I do add in some other levels, like monthly high, weekly, monthly highs, lows, and pivot points, daily highs, lows, and closes, and pivot points, daily pivots, which is S2 and R2, and Camarilla levels as well, which is breakout long, breakout short. The internet is full of these levels. You can go and find out about them. I have a little bit of software that puts them on the chart. You can contact us about that, or I think Mike has something like that as well. And what I'm looking for is confluence around those hour and 4-hour levels. Do we have another one of these levels, which will give me a range to see if we get a break in the market? So also for free, you can go to, if you can see that top of the screen, livecharts.co.uk have all of these levels for you, and you can plot them on the chart. So let's look at an example. Here's my report from this week. I stick out every day a quite advanced report here on a spreadsheet of here's all the numbers, everything that I'm looking at to come up with this summary of I'm looking for reversals at these levels. These are my stops. I'm looking for reversals at these levels. These are my stops. For the same for DAX, NASDAQ, Solana, Bitcoin, and SUI. Or this one, we were in a trade. We're 75% in. We're running it, and I'll update if we're going to do anything. And I generally update on these if any of these levels hit. So the recommendation, this would have been, I think, on Tuesday, was that if the market breaks 23,900, we can look for a reversal in the market. Stop about 50 points. That's sort of guideline. So let's just see what happens. This is the 15-minute chart. You can't really see that the market was trending, but let me tell you, this week the DAX made new all-time highs. It was trending, and here is our level, 23,900 in blue. And it had a confluence with the weekly high, so that was last week's high, and yesterday's low. Market opened here, moves up, comes down, breaks right through the levels, and then sticks in. This is what I would call a Bollinger Band reversal. Perhaps it had, I think it did, had RSI oversold with this as well. Get in here, stop below here, an easy 2-to-1 in the space of a couple of hours, maybe 3 hours or something like that. Now, what I'd really recommend to you guys is, it does sound simplistic. It really does work because people or the market is just looking to take out liquidations and stops while the market wants to move higher. The market generally doesn't go up in a straight line. Let's have a quick look here. This is another great example of market's gone up, it's gone sideways. Now it's going to go up again. If it comes back to about these levels here, takes all of this out, this will also be a point of control because of so much volume here. Comes into these levels, this is S3 and that's a monthly, I think a monthly high. Then I'd look for a reversal. Now, if it just goes through it and doesn't do anything, you don't trade it. But my recommendation to you is start recording these, have a look at them, really simple trades to do, stick an alert in the morning, and if it triggers, go and have a look at the market, and you use whatever kind of reversal that you like in the market. Personally, I use 15-minute and 3-minute charts for these kind of reversals. Okay, so what is my investing focus? My investing focus, as I said before, is in Bitcoin. Why? I believe it's the new digital gold, and Mike and I will talk a lot about that on other calls. It really was in magnetic. It was our big call back in 2019, 2020, and we started buying it around the 15 to 20,000 level. We just made a new all-time high this week. I also, as I say, I'm involved with IBIT, Cantor Fitzgerald, and MSTR because they're basically, they give you a little bit more return than Bitcoin does. Solana really is the leading blockchain for myself. A lot of stable coin action happening on there, and you know the world of banking is really going to change. I think within this year. So this is the blockchain you really want to be looking at, and the other things that we really want to consider at the moment is energy, AI, robotics, and autonomous vehicles. This is where I see the market really going. This is where you want to be putting your investments. For me, I'm invested really in disruption to get ahead of inflation, and also who are going to be the next Mag 7 in the next few years. Okay, so why do we want to beat inflation? I think this drum has been beaten around quite a bit. Do we all understand that fiat money is going to zero? Maybe just give me a heads up if you do or not. Do you think money is increasing or decreasing? Was your meal this year or your steak this year the same price as it was 7 years ago or even last year? Okay, so Greg's saying it's decreasing. Peter says it's increasing. Well, I hate to say it, it is decreasing. And unfortunately for me, and this is a high bar, I think it's decreasing by 14% a year, which means if you're not making 14% or more, you're losing money. So this is a really, really high bar, and we can look at a load of examples, but I can tell you, and you know yourself, that your steak or your wine or your hotel, I mean, my hotel in London that I normally stayed on my 40th was £360, and it was £800 at Christmas this year. That's 8 years. So the value of your spending power is going down. Hence why these days I don't like stock market ETFs. They just don't give you enough return. For the buy and hold strategy, not in red, but maybe tip number 4, maybe I've numbered them wrong. I think we probably all know that a stock market ETF, in the S&P 500, the largest market in the world, is going to give you around 10% a year, and you're going to lose a little bit with inflation or deflation or whatever you want to call it, money printing. But rough and tough, it's going to be about 10%. But if our money is decreasing by 14%, we're just eroding our money every year. At the best, I think that you may be just keeping in line with value, depending on where you live in the world. You may just be keeping in line with that. Hence why these days I really don't like the just buy and hold in the markets long-term strategy. I don't think it works at the moment for our current environment. And here we go. This is the S&P 500 versus money supply. Okay, the amount of money that's been devalued by printing. So over this period, the market went up by 80%, but actual value of your money only went up by 41%. So half of that value was taken away, and this was a good period, 16% a year versus 8% a year. This was quite a good period. So I just want to be very, very clear, though, about that I don't like the stock market ETFs. It's not that I don't like them. I like them. But nowadays, if I was to do it, I'd be trading in and out of them, not just buy and hold. Unfortunately, I think those days are gone. So I used to do that myself, buy in and out of them. I still give recommendations to the clients who want to have less volatility and hold ETFs. I think that's still a good strategy. But for myself, I really like to hold single stocks, and here's why. If we look at the Magnificent Seven, and I think we all know who they are, they're Apple, Microsoft, Amazon, Google, which is Alphabet, Nvidia, Meta, Facebook, and Tesla. They are responsible for 70% of the return. If there was a 90% return, they are responsible for 70% of that turn out of 500 stocks. That's huge. So do I want to invest in 500 stocks, or do I really want to just invest in these front runners that are doing all of the return, or be involved with the also-rans in the market? And they only have they have a weighting of 33% in the market, just by their sheer size. So I always like the principle of the 80-20 rule, that you'll get 80% of your results out of maybe 20% of your actions, or you'll get 80% of your return maybe out of 20% of your trades, something like that. And this is greater than that. So I really want to focus on these stocks, and who is going to be in the Magnificent Seven in the future. That's why I said focus on AI, focus on energy, focus on robotics, focus on autonomous vehicles. And again, when we look and dive into the Magnificent Seven, we can see who are the massive front runners in the Mag 7. Almost 3,500%, 1,000%. Where's it come from? AI, electric vehicles, which actually was Tesla. I think they've got there from that. I don't think that's going to be where they go moving forward. And what other companies could be moving in? MSTR that I mentioned before, 3,000% since 2020. Okay, will Apple remain there? I'm not sure. Will Microsoft? Possibly. Google's debatable at the moment. What's happening with AI and ChatGPT and Grok search? What are they going to do with that? Meta, same situation. Amazon probably going to be there. So I've chatted about this quite a lot in the free channel, the old fear and greed, and I think we all know the adage of buy when there's blood in the street. But I really like the second part, which is buy when there's blood in the street, even if it's your own blood. And I don't think everybody kind of knows that. And I tell you what, When the tariffs hit on Liberation Day or Independence Day, I think it was Liberation Day, wasn't it? On the 2nd of April, and the markets absolutely tanked. I had a lot of blood in the streets, and the clients had blood in the streets. But we've got to get into the market, and I think we all know about these things. Again, the stock market's the only market when things go on sale where customers run out of the store. We get it intellectually, but what I've seen, the behavior of people when that fear is there, and when the markets are tanking, and when the news is going crazy about how negative it is, nobody wants to jump in. And you just have to get in. And what's the solution to getting in? The solution to getting in is confidence. You're never going to get the right entry in the market. You can never time the bottom, but you've got to get in on companies that you believe in. So if you believe in a company, it's not about the price. It's about the belief. You know where that company is going. How is that company being devalued by so much in one day from something else happening? And here's a load of events in history where we can see what actually happened when all of these events, because I'm running out of time, I'm not going to read all of these events, but you can see these events, and we know these events. What happened after 10 days? The market started to recover. What happened after 60 days? The market's pretty much recovered. Well, yeah, Trump Liberation Day, 2nd of April. Well, the market tanked even further after that. What's actually happened since then? Well, I thought I'd just show you. Okay, well, here's the S&P. Okay, there's the big tank, but let's take it. Let's take it from Liberation Day. It's up 6% already. We're not even 60 days after it. Bitcoin is up 35% since then. Okay, just pause for a second. These are the charts that I give the clients. This is my current target for Bitcoin, 26,000, 126,000. You can jot it down. Not going to take everything there, but that's what I'm kind of looking for at the moment. And I think I added a funny slide as well. There's a lot at the moment. It's really interesting how the betting markets, Polymarket is a betting market, how the betting markets are now becoming quite accurate. They were better than the polls for the election. So they're worth looking at. It's a new indicator for me. They're worth looking at. Now, I was joking with the community today saying that, they must have my chart because look, this is like 80 and 70% in this range. This isn't why I'm thinking about that price, but it's something worth looking at and a little bit of a funny. Gold is up 5%. So 5%, 35%, and 6%. Let's go back. It's not too bad. So the S&P, okay, 12%, 7%. Well, we're not quite there yet. Gold, 5%. It's not too bad. And 35% for Bitcoin is great. Okay, it's in line with this. This one was crazy back in 2020, 130% in 60 days. So just want to show you that markets, they come back. They will come back because you've got to do something with your money. You've got to move it somewhere. So anyway, this was the 7th of April, which actually happened to be my birthday. I canceled the birthday, held an emergency meeting with the guys of, here I am just getting very settled into my new desk and my new role, and Trump makes the markets go absolutely bonkers. So we had a quick meeting, and I said, look, guys, we need to get allocated. We've got about 22% sitting in cash at the moment. Tesla and Nvidia, I'm going to get in around the US Open. Bitcoin, I'm pretty much fully allocated in because I've been getting in from a lot lower and been in for a lot of years. But if you're not fully allocated, then 77,000 and Solana, 101,000, you can get in, and I'll update you, once the US market opens. So this is 9:46. Market's been open for about 15 minutes. Okay, we're going to buy Nvidia. We're going to buy Tesla. We're going to buy Nvidia. And for those guys that in my community don't want that huge volatility, here's your ETF options. And it left us with a bit of money, and I must have been, I don't know, I've got my time wrong here, but I think I was meant to say it was going to be 10 o'clock. So I thought, look, let me go and get a bit of birthday fizz. So again, I show you all of this to just give you confidence that when you see these things happen, you need to get into the markets. Well, here's the DAX already up 21%. S&P up 19% since those entries, 26% on the NASDAQ. Now, these kind of returns are returns that people would want in a year, 2 years, potentially 3 years. We're talking about less than 2 months. Now we get into the highly volatile assets, which is why I'm saying you don't need to trade these on leverage, because at 82% since the 7th of April. Tesla, 58%. NVIDIA, 55%. So now you can see two things. One, don't have fear in the markets when they're crashing. Don't watch the media. Invest in companies that you know a lot about. Do a lot of research. I know these companies. I live and breathe these companies every day. So I'm very confident they're coming back. And they've come back in a very, very short period of time. Bitcoin, 35%. I just wanted to show you this one. This was another little trade alert. Again, more to the point of how you can make really, really nice returns in high quality assets. We're not talking about penny stocks here or anything like that. We're talking about Mag 7 companies, NVIDIA, Tesla. Kenneth Fitzgerald is Howard Lutnick's company. I always forget his role. He's not the Treasury Secretary, he's the Commerce Secretary. Very, very clever guys. And they wanted to adopt a Bitcoin strategy. The market went absolutely crazy. I missed this 300% move in what? 1, 2, 3, 4, 5, 6, 7 days. Crazy. Okay, I missed it, but we got in here, and yeah, sorry, I'm a little dyslexic. 55% return so far on that. We'll make it up to the highs. It's a bit of more of a trade, and a small allocation. But also my initial allocation to Tesla is small. It takes time to really start to get to know a stock. Once you've got some money in it, you start to live and breathe it. What's going on with it today? I need to find out what's going on with my cows in the field, if you like. That's why I never listen to anyone that's not got any money. And if somebody tells me about Tesla, I go, okay, 1, do you own a Tesla? 2, do you have any money in Tesla? No. Okay. So you don't have a seat at the table. So be careful with whose advice you take. Now, this is my biggest call for 2024, 2025. Tip number 5. Biggest call before that was Bitcoin. I also had a massive call in cores, which we made a 4 or 5x in Bitcoin. This is the next 4 or 5x from just buy and hold. This is a bit of a brief of what I put in my weekly report. Okay, our allocation is X. And I'm going to give you, my next profit target is $395. If the guys are not fully allocated or have more cash on the side, you can enter again at 290. And here I say, look, if you're new to my investment program or your allocation is below what the allocation is, you can place buy orders at 290 and 250. So guys, there you go. That's where I want to buy if I've got capital, 290, 250, and now you know my target. And I think you already saw maybe one of the master charts that I have here as well. So I don't want to say that's my gift to you, but really I'm expecting great things from Tesla. I'm not going to go into all of the detail here because, again, this is a whole session in itself. But number one, if we want to look at Tesla as a car manufacturer, which I just don't think that's where the profit's going to come from long term, number one, they have the best-selling car in the world, 2023, 2024. I believe they'll do it again in 2025. The big things that you really want to focus on, FSD, which is self-driving at the moment, it's in a supervised version, meaning the car will just drive itself, but you need to sit there just in case something actually happens so you can control the car. Now, most of the time, nothing really happens. It's already live, and US, Canada, Mexico, Puerto Rico, and China, and has a subscription attached to it. Next month, RoboCab is launching fully autonomous car. It will drive itself. Again, I could talk for a couple of hours about this, but just think about this. Cars that will drive themselves. I know they're already there. People say, oh yeah, well, Waymo's out there. Yeah, they've got 1,500 cars. Elon's talking, the guy that lands rockets, and he landed another rocket today, I think the 450th land of a rocket. The guy that lands rockets next month is launching driverless cars. I think this is an iPhone moment. 1,500 cars. He says we'll get to that in a couple of months. So watch out for this. Look on the media. Check out some of the videos. Watch out for that happening next month. It hasn't happened, and I think that the pricing of where we're at the moment, you still have a massive opportunity. I'm expecting price to 5x. If we listen to Kathy Wood, our invest, she's thinking 2030, 2032 at 2,600. Energy, huge. Look at Spain. Look what happened. They had blackouts. We need more and more and more and more energy for data centers, for AI, for compute. You want to be invested in energy companies, and you want to be looking at the moment. I think we're a little bit far out at the moment. You want to be looking at humanoid robots. Robots are coming, and it's not going to be long. I'm looking at 2 to 3 years, maybe a bit longer. Maybe it's sort of a 3-year on where we really start to see humanoid robots doing tasks for us. And the only company at the moment, and the only public company that you can invest in that's doing that at the moment is Tesla. And analysts recently had no pricing in for RoboCab, and they had no pricing in for Optimus, purely valuing it on a EV company. So I think we've got a lot of upside. You do have the prices that I want to get in the market. Okay, thanks, Mike. I'm at 1 minute over. So I just wanted to give you like a quick summary of what we kind of went through and some of the tips. Number one, of course, protect your capital. It's always the first rule. It was always Warren Buffett's first rule in trading. Meaning, don't keep all your money in leveraged accounts. Spread it out. Put it into hard assets that are gonna work for you. You now have my full playbook. You know exactly what I invest in. There's nothing more than that. That's me fully giving you everything. Trade to create cash flow. Long-term wealth comes from investing. I can be testament to that. Take action on the day trade I gave you. Maybe start a project. Look for 30 trades and just see what happens. Come back to me, ask me some questions about that. I'll be taking maybe 5 to 10% of the profit targets that I've given you for Bitcoin. If you're already in there, you can make serious money. And again, I can be testament to that, and you've seen that. Trading high quality volatile assets with no leverage. These days, I make more money doing that than I do on my, well, in 2024, I certainly did. About 10% of my returns were on leveraged trades, and maybe 30% was on non-leveraged trades, and the rest is all investing. Rough numbers, giving you there. Buy Tesla. It's my advice to you. I think you'll be very happy in 3 to 5 years. Don't listen to the media. They're there just to scare you, and not to be a conspiracy tin hat person, but many times they're paid to have an agenda. And again, remember, these guys don't have any money in the market. The money they're making is coming from advertising. So again, just be careful to who you listen to. And listen to, there's a load of people with skin in the game. So with that, I really thank you so much for spending a little bit of your Saturday morning with me. I hope you've enjoyed it. I've enjoyed it. If you'd like to hear from me a little bit more, you can go to my free Telegram channel. You can scan that, where I post a bit about what I'm doing, or maybe I'm doing some interviews or whatever, you can get a little bit more information, or I'll cover some of these tips if you want that I've given here today. I'll also try to post this into the audience as well as a
yeah. So the link to Cameron's free trading investment hub is in the chat. As always, amazing. Thank you very much for your insights, Cameron.